getting the founder into a mindset of abundance. A lot of us, because we don't come from a lot. When we do start to have a business and start to have some business success, it's still really difficult to do away with a lack mentality. And so you almost still kind of hoard stuff in. But I always say you can't open your arms to receive your blessings if your arms are wrapped around yourself.
That's good.
And so it's important. That's a mindset, right? And so it's important to help these founders to reach that mindset of abundance, of being open armed. And when you combine that mindset with proper infrastructure, with proper guidance, then you can really, the potential is limitless at that point.
You're listening to the Black to Business podcast, an educational podcast providing Black entrepreneurs with the tools and resources to start and grow their businesses. We chat with vetted Black entrepreneurs, thought leaders, and business owners as they provide tips and resources to help take your business to the next level. I'm your host, Monique T. Marshall. It's no secret that Black entrepreneurs and business owners have historically and still today face greater challenges in securing capital than our counterparts. We continue to struggle to fund our businesses and ideas for a myriad of reasons, including lack of access to investment capital due to discrimination and racism. This has limited the opportunities for growth of Black businesses, which are integral for the economic advancement of our communities. More often than not, we find ourselves having to use our own personal funds or find other creative ways to fund our businesses, where some may find themselves trapped in a cycle of debt to see their vision through. And I once read that to be a Black business owner in America means enduring relentless racist roadblocks. Woo! We is tired, and I am sick of it. So this week, we invited investor Armond Davis on to discuss the impact that being underfunded has on Black businesses and how, despite the adversities we face, the key to having an abundance mindset. This is a real conversation about how we can have to continue to keep community and mentorship in mind as Black entrepreneurs and really pass the baton to those behind us as we pave the way. Because Armond owns a private equity and venture capital firm, which he invests primarily in seed and growth stage businesses and also commercial real estate, we get to touch on how real estate investing can also help you in your entrepreneurial journey. Let's dive in and get down to the nitty-gritty. Before we get into today's episode, I want to announce that we've reopened the applications for our directory, The Connect. We're looking for businesses that provide professional services that will be beneficial to our target audience of entrepreneurs who are in their startup journey. So if that sounds like your business, you may now submit your business to be listed by visiting blacktobusiness.com/theconnect. Applications are open every 4 months, and we're now accepting applications for businesses for 2022. So to give you a little more information about the directory and how you can apply, the reason we created the Connect is to provide business owners with the resources needed to grow their businesses. And being that Black to Business is a platform that assists aspiring Black entrepreneurs with the tools and resources to start and grow their businesses, we are often asked for recommendations for industry experts who can assist these entrepreneurs with their business needs. So we wanted to create a solution. We want to include businesses who are doing the work. And if that sounds like you, we want to help promote your business to assist you in increasing your exposure, but also letting people know about the work that you're doing to continue to push forward Black-owned businesses. So head over to blacktobusiness.com/theconnect to apply. Now let's get into the episode. So Armond, thank you so much for being on the Black to Business podcast. I want to say welcome and thank you for being here.
Thank you so much for having me. I'm honored that you chose to have this conversation with me today.
Of course. So I like to start by asking for people who are not yet familiar with you, my listeners, if you could just tell a little bit about who you are, how do you get where you are today, and what is it that you do in your business?
Well, I'm just I always say I'm just a guy that works hard and takes chances. And so, my journey started 20 years ago, graduated from Florida A&M University with an MBA in finance, went to work on a big Wall Street firm, worked there for a short period of time, and then went to work at SunTrust Bank in Atlanta for 4 years or so, and worked in asset management. And what I did in asset management was manage the investment portfolios for high net worth entrepreneur clients of the bank. And that kind of helped to reignite uh, a drive for entrepreneurship in me. I'd always wanted to be an entrepreneur. I told my mom when I was 8 years old that I would have my own business one day. But when I graduated from business school, it was 6 months after September 11th. Just shortly after September 11th, and so they weren't really the market was really tough. Job market was very tough, and I did not pursue the entrepreneurial route at that time. But worked on Wall Street for a little bit, then worked at SunTrust Bank for a, a, a few years, and then took my entrepreneurial leap and have spent the past 15 years as a business operator with multiple businesses, ranging from construction, real estate, to marketing consulting, to import export, all kinds of businesses. And so I always wanted to get back to investments. And so I had started my firm, the Paragon Group, as a way to really marry my investment experience that I had early in my career with my business operator experience that I've accumulated over the past 15 years, and to really be able to target minority and women-owned businesses to not just help to bridge that gap between access to funding, and we'll talk a little bit more about that later, but also to help to provide the guidance that is so needed in terms of taking these founders and positioning them not just financially and operationally, but also mentally to be able to scale and be able to grow their businesses. And so I started the firm, and the firm has two funds, one for investing in minority and women-owned businesses, and the other fund to invest in commercial real estate, which is one of my businesses is construction real estate firm. I also have a second master's degree in commercial real estate investment, and so it's a love and a passion of mine. And we'll talk a little bit more, I'm sure, about real estate and the significance of real estate to wealth building as well.
I love that. And one of the things I really love that you said is the guidance for these entrepreneurs, because I think that's so important, that mindset, that mentorship. So I'm excited to talk about this today from that perspective also, because I think that is important when we talk about funding as well. So today we're going to be talking about the importance of access to funding for Black entrepreneurs. And I want to start off by discussing what you mentioned. You also said that you have two firms at the Paragon Group. And with your experience, I want to talk about the current state of funding, for our audience of Black entrepreneurs. So your thoughts on the current state of funding for Black-owned businesses, women-led businesses, in terms of when it comes to access to capital, the knowledge, and the availability to these resources.
Well, I think that it's something that's really... So 2020 was an interesting year from that perspective, right? Because after George Floyd was murdered, there was a rush in terms of a response of corporate America to say, oh, well, we've got to do something and we've got to support. And so you saw a tremendous increase in funding that was made available to Black founders as well as to Black funds, Black-led and minority-led funds that were investing in these businesses, and so that was a significant step forward The challenge has always been to be able to sustain the momentum.
Right.
And I think that what we've seen is that in 2021, those numbers have not necessarily reverted back to the mean, but they aren't showing the same level of strength. I give you an example that women-led venture funds raised just 3.3% of all the capital that went to venture capital funds.
Wow.
And that's just unacceptable, frankly.
Mm-hmm.
That's just unacceptable. And so we have to increase the access to capital because it's not about talent. I want to be clear about that. It's not about talent. I think that if I put a business that's owned by a Black woman up against a business that's owned by a white male, and all of the metrics are equal, I have every confidence that the Black woman can outperform. And so it's not just a social or moral argument to be made, although there is one to be made. I think that the truth is that there's also a business argument to be made, and that these founders really do have the talent and really do have the drive and really do have the capability to outperform and to provide outsized returns. And I think that in the beginning, you can make that claim, you can make the social claim, right? But I think that over time, in order to really have sustained investment, you have to be able to make the business case. And I think the minority and female founders, that they do make the business case. And that's kind of what I'm here to do, is to continue to advocate for that business case, and then deploy the capital that I raise to help these businesses to grow to the next level.
Yes. And when you talk about just, that number, like you said, is unacceptable, the 3%, do you find, because you are the expert and you're in the industry, do you find that there are, since I would say 2020, that things are positively trending, so that there is hope? Or, first, do you find that things are positively trending or they're not going fast?
Well, I mean, by my nature, as a private equity and VC investor, right, I have to be an optimist. And so, and the reason why I say that is because I have to look at a business that's not a mature business and see where it can go and see what it can be. And so I don't have to have, I'm not invested in Apple or Microsoft, right, that have been around for 30 years, where you don't have to be optimistic necessarily to invest in those businesses. So from that perspective, I'm naturally going to say, oh no, I think that there's potential, and I think that we can be accomplishing, we're on the right track. But also in that same vein, I absolutely think that more could be being done. I absolutely think that that additional funds can be allocated. I read I think it was in Wall Street Journal a couple of weeks ago, Black and Latinx venture funds only accounted for 4.5% of all the capital raised in 2020. And we said 2020 was a good year. And so there's still a long way to go. So I can say we're headed in the right direction, but I would like to see us start taking some leaps instead of some steps.
Love that. I like that you said the right direction, but there's still a long way to go. And I always like to speak from the perspective, like you said, being optimistic and, we are doing the work. So today we're definitely talking about the importance of having access to funding and the impacts of having funding and not having. So I want to talk about, if you could, when it comes to the investment community and the lack of access to capital and funding, what do you see has limited the opportunities for growth for businesses when we face these challenges?
Well, I think, if I'm going to talk specifically about private equity, venture capital, by their nature, they are elitist investments. Investment is an elitist investment class. It was really designed to benefit ultra high net worth people and their families. It is, it's definitely a who you know kind of business. And we have not traditionally had access to that kind of a network, right?
Right.
And so we have to be a lot more creative when it comes to raising capital, when it comes to access to funding. And sometimes that works against us because I know I couldn't go to my friends at the country club or my father's friends at the country club and raise a capital to start my business or raise a capital to start a fund. I have to leverage relationships that I've built up over time, but there's no family friends kind of situation that allows for me to be able to just immediately put my hand on $20 million to start a business and grow a business. Now, the trickle down effect of this is that a lot of us, when we first start our business, are already underfunded when we start.
Mm-hmm.
And so you aren't able to necessarily build and set up the infrastructure that you need for your business to help to position it to grow. It's almost like that's the backbone of your business. If you think about it as your business, as a person, as a human being, right? You don't have, if your backbone isn't strong, you can't stand up straight. You can't run. There's a lot that you can't do. And so when you can't establish that infrastructure there in the beginning, then it's already more difficult for you to be able to grow as fast as you otherwise would be able to, right? The second thing is that in terms of accessing capital, because you don't have access to large sums of money on that friends and family, almost friends and family kind of arrangements, most Black people end up running up credit cards, right? You fund your business with your credit card.
Mm-hmm.
You're probably paying 20% interest. If you got a platinum card, a great card, you're probably paying 17, 18% interest on that card. If you got a first time card, you might be paying close to 27, 28% interest on that credit card. That immediately puts you at a disadvantage, right?
Agreed.
And so it makes it to where you're extremely sensitive to fluctuations in the market. If you have a downturn in the market, you have a bad couple of months, and you have problems making those minimum payments on those credit cards at 27% interest, right? It puts you really behind the eight ball. Maybe the credit card company closes your account, or maybe you did have it at 17 and 18%, but because you missed a payment, now you're up to 27. And so these are all factors that create headwinds for us as entrepreneurs. And what I really want to try to do is to help to alleviate some of those things through access to funding with my fund, but also to help to navigate some of those. So some of those things are going to be there, right? And I'm not arrogant enough to sit here and say that I'm going to be able to single-handedly remove all these obstacles. But what I can do is help a founder to navigate them, because I had to deal with them myself over the past 15 years. I mean, I got my business and it was 2006. 2007 was a great year. Everybody knows what happened in 2008. And it was real touch and go there from 2008 all the way through to 2012, 2013. And so the things that I learned during that time in terms of how to navigate running the business, keeping your lights on, doing those things are things that I really do emphasize when I'm talking with founders about how to grow the business and how to survive.
Yes. And I love that we talk about, the adversities that, businesses we're facing in our community, especially. But I think it's also, like you mentioned, it's necessary for us to be in these spaces. And I want to talk about when people who are listening and they may be discouraged or thinking about like all of these things, what do you think is the importance of having Black-owned, women-led businesses? And why is it important to support these businesses?
Oh, I mean, you got to have it. You've got to. It is integral to the ability of the community to thrive. I support Black Lives Matter and the messages that they are conveying in the battles that they're fighting. But I always kind of add a little bit on the back end of that is that, Black businesses matter as well. Right. And we don't just want to live, right? We want to have a life. And the way that you create a life is through entrepreneurship. It's the lifeblood of your community. And so it's necessary. It's not just an option. It's not just a great idea. It's not just a nice thing. It's necessary to create and support Black-owned businesses within the Black community.
Agreed. And I just love your passion and everything that you're doing for our community. And I want to talk about some of the things that you're doing with the Paragon Group. And first, I want to ask about entrepreneurs who are falling into these categories of underserved communities. And normally getting access to funding, what are some of the avenues that they can explore to gain access to funding? And if you could just talk about how the Paragon Group works in also giving access to funding.
Well, we touched a little bit in terms of when you come from an underserved community, that your access to funding is by nature is relatively limited, and some of the more unattractive ways to access funding include credit cards or high interest cards, high interest loans. Loans that require personal guarantees, require you to put up all your personal assets, your house, your car, your everything as a guarantee on the loan. Those loans can be challenging, right? In terms of a founder who comes from an underserved community and doesn't necessarily have a cushion to survive downturns in the market. And you don't want to find yourself in a situation where you're trying to time the market. And so you don't want to start a business and you don't want to say, well, I want to start a business, but I feel like the economy is about to take a downturn. And so I don't want to start it yet. I got to wait. You don't really want to be trying to time the market. You want to be able to start your business at the time that you feel that you're ready and be able to grow the business. If it's a great idea, you want to have access to reasonable cost of funding, and you want to be able to use that to grow your business. So where the Paragon Group comes into play on that is through the Enterprise Fund. And like I said, that fund is designed to invest in minority and women-owned businesses. And I focus really on what would be considered micro businesses. And so it's businesses typically under $10 million in revenue, but have a potential or in a position to be able to scale up. I look for founders who are very product focused, very service focused, and really working towards creating the best in class product or a best in class service that then we can come in and bring our business knowledge, our business expertise, and our relationships to help to scale that business. And there's some steps and things that have to be taken in order to position the scale, because oftentimes, like I talked about, that backbone, that infrastructure there is a little weak, right? And so that's the first thing that I want to do when I come in is strengthen that backbone. Like we say, get you some iron, take some iron pills.
Definitely.
Yeah. And we can strengthen that backbone and make the accounting processes, the record keeping processes strong, because when you look for additional funding for that next round of funding beyond us, that's what they're going to be looking at. That's what they're going to be following. Getting the founder into a mindset of abundance. A lot of us, because we don't come from a lot. When we do start to have a business and start to have some business success, it's still really difficult to do away with a lack mentality And so you almost still kind of hoard stuff in. But I always say you can't open your arms to receive your blessings if your arms are wrapped around yourself.
That's good.
And so it's important. That's a mindset, right? And so it's important to help these founders to reach that mindset of abundance, of being open armed. And when you combine that mindset with proper infrastructure, with proper guidance, then you can really, the potential is limitless at that point.
Love it. And one thing I will say is that I'm so excited that you're here also because of what you're doing. And I think that we oftentimes on the podcast don't get to talk about investing a lot. And this is something that we're doing more of. But I always like to break it down to my listeners who are new. So I know the Paragon Group does private equity and venture capital funding. So if you could just break down, what does that mean and how does it work?
So private equity, venture capital, it's considered an alternative investment. So you have kind of core investments, which is publicly traded companies investing in the stock market, investing in mutual funds, those kind of investments. Those are investments that are typically you're going to get S&P 500. You're going to get an 8 to 10% annualized return, and those markets are considered to be efficient markets. Now, by efficient, what that means is that knowledge is readily available to the general public about those businesses or those entities that you're investing in. Now, we all know that markets are not truly efficient, and there are some people that have more access to information than others. But generally speaking, these markets, the general equity market, even the bond market, those are considered to be efficient markets. Private equity, venture capital are almost, just as they described. Instead of it being a publicly traded company, oftentimes these are privately owned businesses. And so access to knowledge and information is much more limited. And so they're considered to be higher risk. Because they're considered to be higher risk, the government had put protections in place to, at least this was the story, right? That they put protections in place to help to protect the retail investor, the average investor, from the risks that are inherent in some of these kind of deals. And so they created more or less that you have to be an accredited investor in order to participate in these kind of private equity, venture capital type of deals. And so an accredited investor, typically you have to have $1 million in net worth, or you have to have annual income, I believe it's $200,000. So it's annual income. And that allows you to say, well, I'm an accredited investor, which means that I have a knowledge of investments that allows me to take to pursue more risky investments, right? Well, the trade-off with this is that you have, because of the higher risk profile, you also have higher return requirements. And so I read an article last week that talked about the wealthiest universities in terms of their endowments, and the Harvards, the Yales, the Dartmouths, the Stanfords, the way that they've been able to grow their endowments as so much more than HBCUs, for example, is that they invest in private equity, they invest in venture capital, and they get outsized returns for making these investments. So another category of alternative investment would be commodities, art, right? So they invest in artwork, and they buy a painting for $20 million, and 10 years later it's worth $40 million. Well, you can't do that investing in the S&P 500. And so private equity is, I still feel like it's the lifeblood, though, because all of these big, huge public businesses, publicly traded companies, at one point were small mom and pop businesses.
Right.
Hewlett Packard was started in a garage. And so at some point, private equity and venture capital played a role in helping those businesses to grow. And so what I'm trying to do is to play that role for our minority and women founders who have fantastic ideas, tremendous work ethic, outstanding intelligence, and limitless capability.
Love that. So someone is listening and they are like, that's me. I have all those things, those things. So what makes a company attractive? Like I always want to speak about, how can companies prepare? So those who are listening, what would make them attractive and how can they be prepared to, get funding from a company like yours or a firm like yours?
Well, I mean, for me personally, I'm a little bit further down the line than, say, an angel investor. I'm not an angel investor.
Mm-hmm.
And for those who aren't necessarily familiar, angel investor to invest in the earliest possible stage. Oftentimes, there's not even a product yet or a service. It's just an idea. I like for there to be a product that's in existence or a service that has been demonstrated. I like for there to have at least been some proof of concept in terms of, okay, you've shown that you created this and there is a demand for the product or the service. But now you need, in order to be able to scale, you need funding to be able to meet that increased demand or to be able to expand to other geographies, right? So that's really kind of where I am in terms of the initial thing. The second thing is really the founder, because when you're talking about a business that's this size, it really is very much so driven by the founder. This is not a situation where you've got a business and it might be a $200 million company, which is not a large company, really, per se. $200 million, there are companies that are obviously hundreds of billions of dollars. Mm-hmm. But if you got a $200 million business and the founder kind of goes off the rail, you can replace the founder and find somebody to continue to run that business. The businesses the size that I'm looking at are heavily dependent on the founder to really, one, have a vision, have a work ethic, also being coachable. And so mm-hmm. I'm really looking at the profile of the founder in terms of those things. And they look all kinds of different ways, but there's certain traits and characteristics that are necessary for success, right? And, you've got to have that kind of work ethic. You've got to have a small ego. There's no room for ego in business. You have to do what's best for the business, not what's best for your pride. And so those are kind of the things that I'm looking for in a founder when I'm having a conversation with a founder. In terms of the specific product and service, then I do want for you to have developed the product, developed the service, and at least been able to demonstrate that you have some demand for that in the current market.
Love it. I was just jotting down that I definitely am going to have that as a quote. There's no ego in business. I love it.
Yeah, no room for ego in business.
No room.
You can't walk in there and talk about what's best for you and what you have to do. It always has to be what's best for the business.
Love it. Thank you for explaining that. So Armond, I also want to talk about your investment strategy when it comes to focusing on real estate and real estate investments.
Yeah.
I know you have a background in commercial real estate. So I want to talk about why the focus in real estate and real estate investments.
Well, real estate is, frankly, it really creates more millionaires than almost any other industry. It's really unknown. People think that you start a tech company and become a millionaire. That's the easiest way to become a millionaire. But if you really pay attention over time, acquisition and holding and management of real estate has been tremendous particularly actually for people of color, in terms of being able to build wealth. In the Black community in particular, a lot of the wealthiest people, the most influential people, are in some way, shape, or form tied to real estate and owning real estate, owning property. So for me, like I said, I have relationships. I've developed relationships over time, and I look for opportunities to acquire properties either at a low cost basis, below market value, or to acquire properties that are in high demand areas that can um, really be supercharged, that we can execute on in a way that drives IRR for our limited members and our partners. And so I'm not looking for a specific class. I'm not looking for only multifamily, only mixed use, only industrial. What I am looking for primarily off market deals. Um, being a new fund, and I'm not trying to be competing with the largest REITs and real estate investment funds for publicly listed properties and putting in RFPs when people have frankly deeper pockets than we have. Mm-hmm. And so we look for off market deals that we can acquire quietly, and like I said, and work at a relatively low cost basis. We may keep the current owner, the seller, in the deal so that they can participate in the growth and what we are able to execute on the property. And the most important thing is simply being able to execute. And that's kind of where I come in to play because of my background in the construction and real estate business, is being able to execute on the acquisition and on the supercharging of the value of the property.
Love it. And I also want to ask you about your strategy, because I was reading and doing my research, and I noticed that you talk about the market growth in the Southeast region. Oh, and yeah, I just want to get your thoughts on, that, because I always think about, people are saying like Black people should be in this area, or there are not enough Black people in this area. But I want to talk about the benefits and opportunities for Black people. But I also want to talk about first your strategy in, the regions and the growth markets.
Well, the strategy of the regions is very simple. You go where the people are. Mm. And if you look at the patterns over the past several decades, actually, people are leaving the Northeast. People are leaving the Midwest, and they're moving to the Southeast and Southwest.
Yeah.
Right? Atlanta, I believe it was Penske. Penske said Atlanta is the number one moving destination in the country for the past 10 consecutive years for large cities. Mm-hmm. Number one in the country for the past 10 consecutive years. And so you want to invest where you see the demand going. And so that's going to be in the Southeast. It's going to be in the Southwest. So it's going to be Atlanta. It's going to be Nashville. It's going to be Houston, Dallas, Phoenix. It's going to be even LA. And so I think that you don't try to outthink the room, right? You kind of let the data dictate where you move and where you focus, and don't necessarily fight the data. We got enough battles to fight, right? So
that's true.
That's typically going to be my focus. Now, that's not to say that if there's an opportunity in Chicago to acquire a really nice piece of property that can really be that we can really execute a nice project that will really help the community and have a tremendous impact on the community, that we wouldn't necessarily pursue that. But our focus, generally speaking, is on the Southeast and the Southwest, because frankly, that's where the people are, and that's where the people are continuing to come.
Mm-hmm. And like you mentioned, like the weather is nice, all of those things. But I also often think about, just hearing people say we can't have anywhere, like, especially like where a big group of Black people can be and just thrive. But then also sometimes the thoughts about, okay, no one is looking over here, let's go over here. But I love that you said, go with the data, look at the data.
Yeah. So, well, and Charles Blow has written about this and said that he has encouraged that Black people in particular, we have a reverse migration. Mm. and that we should move back to the South in large numbers to create a political juggernaut. And I think that there's truth behind his thinking and what he's saying. And I won't get off into that from a political perspective, but also from a business perspective and from an entrepreneurial perspective, that if something like that was to take place, I think it would be beneficial for Black-owned businesses as well.
Yeah. And just to have a full circle moment in, funding, you also talk about the impact of real estate on wealth building. So I want to talk about, we just spoke about the capital and the access to capital that Black people have in general. But, this perspective on real estate, wealth, why do you feel that the Black community and businesses should be more intentional about being ahead of the curve when it comes to real estate or real estate related investments?
Well, I think, maybe, like I said, I think that, with Black-owned businesses being and with real estate in particular, being a driver of wealth, I think that it's important. Also because real estate touches every industry, right? Because retail needs real estate, tech needs real estate, all kinds of businesses, all businesses, food and beverage needs real estate, restaurants need real estate. And so you can, and I mean, another thing, we talk about a really hot and trending is cannabis. Cannabis needs real estate too. And so real estate can put you into all of the aspects of business. And so when you look at it from that perspective, it's kind of a no-brainer that a significant proportion of your capital should be deployed in real estate. Also, they're not making any more land unless you're in the Middle East and they're dumping sand in the Gulf and building 100-story hotels on man-made islands. Real estate, whatever real estate you own, it will be a increasingly smaller a part of available land, which inherently increases the value of said land. And so people really get caught up in the structure that they have on properties, but really it's the land that you're acquiring and the right to do with the land, what we call in the real estate business, the highest and best use. And so I think that for that reason, real estate should not be overlooked. Real estate also, because of the way that it's structured, also tends to require less in terms of because you can lever it up, right? You can put 5% down, 20% down, acquire an investment property. Whereas if you're starting a business, you probably have to fund it all unless you're going to take out these credit cards, right? Like we talked about. And so for that reason, real estate is also attractive to people who are looking to get into entrepreneurship and get into owning their own businesses.
Perfect. And what are some ways that entrepreneurs can look to become more knowledgeable about real estate investing?
Well, listen, I recommend everybody, if you really want to get into it, I recommend at a minimum, you go get your real estate license. The test is not extremely hard. But it does provide a great foundation for you in terms of acquiring real estate, the legalities around property ownership, and those things. I would say go get your real estate license. That's that would be the first step. I mean, I've had my real estate license now for almost 20 years. Other than that, there are plenty of books out there that you could read, but you learn more by doing, right?
Exactly.
And so I always do recommend that you look into first-time home buyer programs, you look into other programs that may be in your respective cities that are set up and designed to help to encourage investment in certain neighborhoods and certain areas. Also, Get to know the construction side of things, because you're not going to be buying, especially if you're just getting started and you don't come from money, you aren't going to be buying real estate that doesn't need any work. So your number one cost is going to be in your cost that you spend on the contractor. That's going to be your number one cost. So build relationships. Real estate is very much so a relationship oriented business. It is not at all an efficient market, as we talked about earlier. It is totally about the relationships that you have. I don't pay the same to get a house painted that you pay. And it's because of the relationship I have with my painter. Well, that cost goes directly impacts the bottom line of any property that I own. So build relationships with the contractor, build relationships with your lenders, and build relationships with other realtors and brokers and property owners in the area in which you want to look.
I love that. I love that advice about going to get your real estate license. That is great. Just in general, like you said, to be educated about it. So great advice. And Armond, I want to talk about one of the things you spoke about earlier, and I think it's very important. So you require each founder that you invest in become a mentor to the founders in their local community. Absolutely. Why is that? And why do you feel that that's so important?
I mean, it isn't. And when I say require, I mean require. I mean,
you meant it.
I mean, if you don't do it, I'm gonna pull your funding.
I love it.
I mean, it's required, and it's just because I didn't get where I am today on my own. There are people that took time to share knowledge and experience and trauma with me, for me to utilize that knowledge and information to make better decisions. And that's what I'm doing with these founders. And you got to pay it forward. You got to pay it forward. And it goes back to what I talk about in terms of mindfulness, in terms of having a mindset of abundance. A lot of people, they don't want to tell you how they did what they did, right? Or how they got there, or the things that they did in order to get where they got, because they're like, well, I don't want you to take my idea, or I don't want you to copy what I did. I don't have any problem with telling you what I did, how I did it, how I got there. That doesn't necessarily mean you can execute the same way that I executed. Right? And so we still have to go forward in that mentality of sharing of knowledge, sharing of experience, almost in creating a hive mind in our community, right? Where knowledge is institutionalized and not individualized. And so the purpose of the mentoring program and requiring founders that I invest in to mentor other founders is to really create what I call an ecosystem of exchange, where knowledge and ideas are flowing freely and the rising tide is lifting all the boats.
That is so important. And I definitely agree. And speaking of, knowledge sharing and just like helping one another, what advice would you give to someone in their first year of business?
In their first year?
Yes.
Wow. As much as possible, build your infrastructure and put processes in place that can be readily duplicated. As much as possible. I realize that there are limitations to the ability to do that when you first get started. One, likely because of lack of capital, right? But as much as possible, try to get those things in place. Secondly, hone your message. Develop an elevator speech and then develop a little bit longer speech, right? You want to be, if you meet me on an elevator and we're in the lobby and we're going to the 10th floor, you should be able to at least tell me who you are, what your business is, what your business does, and where your business is going by the time I get off that elevator on the 10th floor. And you should be able to hit those points and practice it, right? Practice doing it. Now, when you get in front of me in the boardroom, then you obviously will go into a lot more detail on that, right? And so you'd be able to talk a lot more in a lot more depth, and you might have a 45-minute presentation as opposed to a 30-second presentation. But work on that and drill yourself on telling your story. And it should become second nature to tell your story.
Love that. And what is the best risk that you've taken in your entrepreneurial journey?
The best risk that I've taken? Well, I would say betting on myself, right? I think that's important. You gotta believe in yourself. You don't believe in yourself, especially if you're looking for capital, you're looking for private equity, you're looking for venture capital. We can smell it on you. So why am I going to give you $1 million and you don't even really believe in yourself? You're not even sure if you're going to make it. So you got to, bet on yourself, believe in yourself, but also remain humble and open to coaching and advisement.
Great advice. And any tools or favorite resources that you've used to help you that will be valuable for our audience, and something that you can't live without?
Something I can't live without. Tools are interesting. Listen, the internet is your friend.
Mm-hmm.
Okay. The internet is the closest thing that we have to a database of free knowledge. So when you have a feeling or you have an inclination or a motivation, rather than just jump out there, do some reading, right? Reading is fundamental, as they say. So that's one thing. Another thing is, again, get your mind right. We say that as a saying, and especially in the Black community, get your mind right.
Right. I thought of a song.
Right. But get your mind right. Prepare yourself mentally and spiritually. I'm not saying religiously, but spiritually for what you're going to go through, and prepare yourself for success. So, I read books like The Secret Science by John Baines, A New Earth by Eckhart Tolle. And those are not what you would consider to be business books, but those principles that are espoused in those books have helped me tremendously in terms of my overall outlook, not just in business, but also in life.
Yes. Speaking of Eckhart Tolle, I think The Power of Now is like one of my favorite books, but it's such a read to get through. Yeah, like you said, it makes you sit there and think and look inward and just like be present.
Yes.
So I agree.
Yeah, The Four Agreements is another one. That's an easy. Those four principles, right? Don't take anything personally. Never make an assumption. Right. Mm-hmm. Always do your best. Those things always apply. Those things apply daily. Right. In this.
Yes. And Armond, what does it mean to you to be Black in business?
Man, that's a great question. I think it means to me that I am the embodiment of the dreams of my ancestors. I think that I don't think at all that I'm the most intelligent or talented person of my lineage. The people that came before me, my great-grandfathers, my great-great-grandmothers, they had all the talent, they had all the capability, and they dreamed of a day where one of their descendants would be able to not just have their own business, but also to invest in other people's businesses. And so I'm just a vessel for the knowledge that has been passed down. And that's why I share the knowledge and information that I have. And that's why I require that if I invest in you, you have to share it too.
So Armond, this has been so great and amazing. And this is just such a good conversation. I want to ask, for people who are listening, how can they find you? How can they connect with you? And how can they support you?
I'm all over the place. I'm on LinkedIn, Armond Davis. I'm on Twitter at Armond Davis. That's ARMOND Davis, Instagram at I am Armond. And so you can reach out to me on any of those platforms, and I'll be happy to have a conversation.
Amazing. Well, thank you so much for being on the show. This was wonderful, and we appreciate you for being here.
Well, thank you so much for having me. It's been a pleasure.
Of course. Okay, so that was such a powerful conversation, and the word that continued to show up for me was resilient. And that's who we are as Black people. Despite the times that we may face adversity and hardships, we still win. As Armond said, there's no room for ego in business. So as you build your business, think of it as legacy building. Remember to pass the baton and find your people. This means find your community of other like-minded entrepreneurs. Find the people and the firms that believe in your business and are willing to invest in your business. Most importantly, make sure that you take the time to build a proper foundation and infrastructure so that your business is here for the long haul. Okay, family, this was awesome. So be sure to visit blacktobusiness.com/70 for resources and full show notes. And of course, I'm going to ask, be so kind to leave us a review on Apple Podcasts because they mean so much to us. Until next week.